Steve Peterson with Infinity Investments, and welcome to our channel where we talk all things commercial and investment real estate. And in today's video, we're talking about exchanging into alternative property types. So in the 1031 exchange process, you have to buy what's called like-kind property. Essentially what that means, if you're selling real estate, you have to swap deed for deed. What that doesn't mean is you have to, if you sell an apartment building, you do not have to buy another apartment building. You can buy an office building or a hotel building or another property type. The thing you need to be aware of is you have to swap, exchange deed for deed. So you can't just buy, stock interest in a real estate investment trust. You have to buy an actual deed or a partial interest in the deed. But for today's purposes, we're talking about switching up property types and some of the nuances within that. Number one tip I would say is identify what property type that you want to exchange into before you close escrow. Now, this is important for a couple of different reasons. Now, when I say close escrow, what I mean is when you're selling your what's called in the business down leg property or the relinquished property, the property you're going to exchange out of, you want to decide before you close that, what type of property you want to invest in. And you want to have a clear set, defined criteria for what you're looking for. But if you're particularly going to switch up your property types, you need to know that before you close because it's a little bit of a different business. If you're in apartment buildings or if you're in retail or if you're in office and you're going to switch that up, you want to get a pulse for that market, and you want to get that pulse before you close. Because once you close, the day you close, you've got 45 calendar days to identify up to 3 properties, potentially up to 6 properties using this 200% rule. But you got to identify those properties within 45 days. So you don't want to be just getting familiar with the business of the new property type in that period. You want to have some familiarity, some background, having had looked at some deals before you close. I think that's really important. I've got a client, we're looking at going from multifamily into single tenant triple net. So we've been looking at deals, we've been going over the nuances, a lot of different questions that he has coming up because it's a new thing for him. And he's looking at potentially moving into retirement. And so a lot of people who are looking at retirement, real estate, love single tenant triple net properties. Because it's truly mailbox money. You buy that single tenant triple net with an absolute triple net lease, you are just collecting checks. The tenant is responsible for their own maintenance. They're paying taxes, insurance, common area maintenance. You're just collecting the check. So it's a different business though. And the brokers are different. The financing, a little bit different. And there's a lot of brokers that can both do multifamily and retail and all of this. But there's nuances, and you need to be prepared for those nuances up front. Too many people, too many clients in this business just get into a scramble during this period of time. And while you're listing or while you're selling your downland property, that's the time to really, if you're going to switch asset class, that's the time where you need to be dialing into that business. Okay, that's the number one thing I would say is get familiar with the property type that you want to exchange into before you close escrow. Number 2 is, now you need to set forth your investment criteria for that piece of property based on that market. It could be totally different when you go from, let's say, multifamily retail, industrial to hospitality in terms of what cap rates are, what debt coverage ratios are for lenders, and just kind of what's going on in the market, right? I'll give you an example. As we're selling a few apartment buildings and going to single tenant triple net, I'm seeing some pretty attractive cap rates that you're not seeing in multifamily. I'm seeing more 5.5-6% cap rates on good quality properties right now, and that's exciting, because that's what we're looking for. We're in multifamily in our market, in the same market, you're seeing more 4.5, 5, and if it is above 5, it's pro forma. It's not based on actuals. So you need to get real familiar with what's going on in that marketplace in terms of the rates of return, in terms of vacancy, in terms of is it really a buyer's market or a seller's market? That's really, really important. Like for instance, in industrial property in the Bay Area, it's hot. If you're trying to buy industrial property, there's a lot of demand for industrial property. Okay, if you're trying to buy hotels, not as much demand, right? Not as much demand. So if you're exchanging into hotels, you might have more available inventory, or sellers may be more likely to negotiate with you. The flip side of that, financing is going to be more difficult, right? So, you need to know that kind of, again, going in before you close escrow. So you got to define your criteria, what cap rate you're looking for, what cash on cash. If you operate by gross rent multiplier, what GRM you're going to use. A lot of people now in this stage, this is a good time, especially if you're moving up or you're moving towards retirement, or you're really just, in your second or third exchange. You need to start paying attention to the internal rate of return, the overall rate of return. That's something that, bigger companies and bigger investors always look at. And as you move up the ladder in the real estate investment world, that you should be looking at as well, especially as you start moving towards retirement, because the overall return is critically important, right? So that's a key piece right there. And the third thing I would say, as you are exchanging into a different product type, is making sure you can finance that property type. I just said a few minutes ago that, okay, say you're looking to buy hotels, more sellers may be willing to negotiate. There may be a little bit more inventory than there's like industrial properties, but the financing is going to be different. And again, it's going to be different in apartments. It's going to be different for retail. It's going to be different for office, different for industrial. All the different food groups have their nuances, right? And there's some brokers that are out there that say, hey, I can do everything. And there's some bankers and brokers that can do everything. But it's really good to work with a specialist who is an expert on that product type. And you want to get, qualified, you want to get up to speed in the financing of that product type, again, before you close escrow. Because it is different, especially today in this post or pre or in the, I'm going to say pre, but post or in the pandemic, whatever we are, it's May 2021, it's different and it's difficult. So as I'm telling my clients, I'm involved in 3 exchanges right now. Hey, you need to be talking to your lender. You need to be every deal I run by you, run by them. I'm working on getting rent rolls and P&Ls and everything. So when I send it to you, send it to them. So they can look at it and they can say, hey, here's what we can do for you. And we're going to need boom, 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 X, Y, Z. Financing's taking longer. Just underwriting's taking longer. The scrutiny of everything. I've had 2 or 3 deals push out into 3 to 4 month escrows. As a listing agent, it's extremely frustrating. But I understand what's going on in the marketplace because I'm dialed into what's going on. So I know what's up. So that's why I'm telling my clients to get on top of the financing piece, especially if you're going to a different product type, because it's different. And a lot of people right now are selling apartments in the Bay Area particularly and wanting to just move to a different product type because they don't want to deal with rent control and eviction moratorium. So that's cool, but you got to know what you're doing, man. And you got to know what you're doing before you close escrow. Do not just wing it on this, man. The taxes, could be significant if you mess your exchange up. And if you had a good asset, and you sold it, now you're paying taxes, that might not be a good plan. Remember, when you're doing an exchange, the primary goal for the 1031 exchange is to acquire a better asset and do so in a tax-deferred manner. It's not just to defer the taxes. The deferral of the taxes is the icing on the cake. It's the cherry on top. The better asset piece is what we're after, all right? So just a couple of tips as I'm going through it, wrestling with the market, working with clients, navigating and getting things done. I hope this helps out. If it does, subscribe, throw a like, tell me I'm crazy, whatever it is. Let's do some business. We gotta keep our head up and our eyes open. Best of success to you and your investing career.